Happy Monday, Maverick traders. This is Rob. This is the market roundup. Let's jump into it. In this session, we're going to be going through the news of the day. We're going to take a look at commodities. Wild ride in the oil market for sure. And I've got two bulls and one sideways for you today.
All trades and analysis in this video are for professional traders only. This video has been released to the public after a delay required by our compliance department. Maverick traders receive this market recap immediately, along with real-time trading support and resources. Maverick Trading is a proprietary trading firm that backs professional stock and options traders with firm capital. Our traders keep 70 to 80% of the profits they generate. If you're ready to become a professional trader, click the apply link in the video description below. Let's break down what happened in the markets today.
One of the themes I've been talking about is sideways with volatility. And that's exactly what we saw today. Over the weekend, we had some big news. The U.S. struck Iran's nuclear facilities, and when the futures opened, so let's go through what happened. Cryptos opened over the weekend, so Bitcoin fell below 100,000, was down about 4 or 5% across the board. When the futures opened up on Sunday night, they opened down about 1.5%. That was the low point, and people bought, and it was a pretty big run until the markets were down about 0.5% overnight. So overnight, markets are down about 0.5%. By the time I woke up in the morning, the futures were actually positive or break even. And then we had a run in the morning, and then we fell apart, and then some news came out of Iran, and then the news came out that Iran made a retaliatory attack, only like 10 missiles, and then they said, we're done, we're finished. Basically, the signal to the US was, hey, we had to do something, but we don't want to make you mad, so we only did a little bit. The market really reacted positive to that and went up a percent from there. So look at the moves we had. 1.5% down to all the way from 1% up. Then we lost all that 1%, and then we ended up 1%. We had 4 1% intraday moves, and you can see that it was just a positive day across the board. So everything up about 1%, the Russell up 1.2%, and oil down 9% for the day when it was up about 3 or 4% at the beginning of the day. We'll take a look at that chart here in just a second. Taking a look at the S&P. I've been saying this for the last 2 weeks. Imagine you have been in a coma for 10 years and you woke up today and you looked at the stock chart. You had no idea about the Iran conflict. You had no idea about tariffs. What would you do here as a trader? Well, the answer is you would go long. However, all of our emotions are getting in the way to us going long. This was just a beautiful, beautiful bull pullback, very orderly pullback right to the 20-day moving average. And we got a nice candle today, close at the high. Look, I have no idea what's going to happen, but most of the time we see this thing break to the upside. Question is, do we have the oomph? Do we have the energy in late June going into the tariffs? The answer is probably. I think we probably do. This market has been so resilient, you definitely don't want to be betting against it. That being said, we are still in a base. We haven't broken out yet, and every time we've gotten to the top end of that base, we've seen some selling. So just, again, mildly bullish here, waiting for that breakout. Here's oil. This was where it opened up, $77, and this is where it closed, $67. That is a huge, huge move. And this was where the Iran attack came, and they said, okay, we're done. You can see really fell apart right after that. Overall, overly bullish day, 2 stocks up for every 1 stock down. You can see the energy sector, really the only place of red. Everything else totally green. Where does that take us? Last week, I moved down from a +3 to a +2. It's not a big deal. You could easily move back up to a +3. I like to be a little bit laggy on my changes, meaning just this morning, we were trading below the 20-day moving average. I want to see a couple more candles before I say, okay, we're clearly above the moving averages here. Let's go into some potential trades. Some of these have been on my list for a while. Some of these are new. Everything just looks really bullish. I got to say, the bears out there just don't look good. This is just telling me that this market is likely headed higher. When you go out there and all you find is bulls and you can't find a bear in sight, it's telling you where we are in the market. Beautiful high base on Zscaler. ZS, you can see high base. We broke out of the top end of that range. I don't see any reason why this thing can't go to 330 in this market. That being said, I don't need to be that aggressive. I like 320. So I'm looking to do the 310, 320 July monthly options expiration on this one. It's going to open up, probably going to cost me about $1.70. That means I got $3.40 in upside potential. I did that on a $5 spread. Let's do that again. It's probably going to cost me about $2.80, maybe $3.20 on a $10 spread. That means I've got $6.80 of upside potential on this $10 spread. Any other bullish trade could absolutely work on this. This one looks absolutely fantastic. And so does this one, GEV. This is GE Vernova, sorry about the R. This is an energy play, and you can see that we have base here, and it's looking to bump up the top of the base. 500, these round numbers tend to act as resistance, and when they break, there's a nice little pop off of them. Where do I think it's going to go? I think 510 is an easy call. I know that $10 seems like a lot, but that's the same as a $50 stock going up to 51. That's the play, the 50 or the 500 up to 510 vertical spread on this one. All the technicals are telling you this thing is likely going higher. And on a sideways trade, we got Lilly. This has been something that's been on my sideways list for a little bit, and you can see it is not participating along with the market. It's just going nowhere. Ultimately, the range is between, let's call it 720 and 820. You have to pick the midpoint where you think it's going to be. I'm going to lean slightly bullish, meaning I think I want to be higher up in this range, like up in here. So I'm going to choose 780 or even 790 as the strike. So let's go like $40. So 740, 780, 820. That's going to open up this window, and your profit window is going to be probably right in there on that butterfly. So slightly bullish, but sideways on Lilly. Let's talk about tomorrow. We still have the risk. The geopolitical risk is still there. We don't know what could possibly happen. Iran has threatened to close the Strait of Hormuz, which I think 20% of the world's oil moves through that. If they do, expect a response from the United States and their Navy, probably going to escalate the situation even further. But again, all these things are short term. I want to be careful with what I say here. It doesn't pay as a trader to be political. It doesn't pay as a trader to be a fan of your country. I'm just going to be stating facts here. As it looks right now, Israel has done some significant damage to Iran's military. The United States has done significant damage. At this point, it looks like the ability for Iran to mount a real fierce retaliation attack has been greatly diminished. If there is more provocation, and let's say that they do close the Strait of Hormuz and the US Navy goes in and blows up Iran's Navy, then all of a sudden, it's now even closer to the end. The market is going to start seeing these things as positives, as an end to resolution. That's not a political statement. I don't like war. I don't really want to get into that. But as far as the market's concerned, that's what's likely to happen. So more tensions probably tells you that we're closer to being done in the end. It's a weird thing to say, I know, but that's where we are in the markets. A couple economic reports tomorrow, nothing of confidence, really no earnings. Thanks for joining me. That's the Market Roundup. Goodbye, everyone.